Yes, you guys, the title of the video is true. I'm going to be selling some of my shares of Realty Income, ticker symbol LO, one of the first ever dividend stocks I purchased in the early days of my investing journey, almost a decade ago. Now, as of right now, I currently have around 2,800 shares of ticker symbol LO that I've been holding on to for the most part for several years. And over these last years, Realty Income has been paying me dividends every single month, which I absolutely love and I really can't shut up about, and also increasing their dividends very consistently. So am I bearish on Realty Income? Am I worried about this stock? Absolutely not. And am I selling every single share that I have? Well, stay tuned to find out. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now just to back things up for a second, like I said, Realty Income stock was one of my first ever holdings. I'm sure you guys already know this. And this is because when I first started investing in the stock market, I had a huge interest in real estate, which over the years has sort of died down a little bit, but I still do like having high quality exposure to high quality real estate. So because I wanted exposure to high quality real estate, and because as a newer dividend investor back in the day, monthly paying dividend stocks were awesome to me, Realty Income became a large position in my portfolio, even in the early days of my investing career. Now, right now, my 2,800 shares, more or less, of Realty Income currently pays me north of $700 per month, which is amazing. And even though Realty Income, basically, since I started holding on to it, has really not done all that much as far as grow my actual net worth, it has grown a little bit since I started buying it more or less. And also, I've been selling covered calls on my shares of Realty Income to earn a ton of premium during a sideways trading market. And on top of that, that 6% dividend yield, more or less, has definitely made up for it over the years. But this does bring me into what I plan on doing, at least with a portion of my Realty Income shares. I'm not selling all my 2,800 shares of Realty Income. I might sell a few hundred shares and slowly move over some money into the NEOS Real Estate High Income ETF, IYRI. Now, we're going to go through this ETF and I'm going to share with you guys why I do plan on moving some money from Realty Income stock, which, like I said again, offers around a 6% growing dividend more or less, and also offers some potential upside with cheaper interest rates sometime in the future. I'm going to move some of my money over to the NEOS Real Estate High Income ETF for a few specific reasons, but before we talk about it, let me explain what this ETF is and how it works. So it says targeted benefits of IYRI strategy. It says the fund seeks to distribute high levels of monthly income through a data-driven call option strategy on ETFs that seek to track the Dow Jones US Real Estate Capped Index. Now, remember I mentioned that I actually sell covered calls in some of my Realty Income shares. Because I sell covered calls and because Realty Income pays me around 6% per year, I'm actually earning somewhat similar to the distribution rate this ETF offers. I'm probably earning closer to 9 or 10% per year based off of that, but the NEOS Real Estate High Income ETF is offering a distribution rate of around 12% as of right now, which is way bigger than Realty Income. And number two, it says actively managed by NEOS, which I'm also a huge fan of. The fund seeks to offer upside potential in addition to the primary objective of high monthly income. Now, when it comes to real estate or REITs, honestly, all I'm looking for the most part is cash flow, consistent cash flow every single month with some slight capital appreciation and some tax efficiency, which we're going to talk about. That's perfect if you ask me. Now, lastly, it says the fund may offer efficient exposure to a portfolio of US listed REITs with an enhanced layer of high monthly income potential packaged into a single ETF. And from what I've seen so far, they have done this perfectly. Now, one of the main reasons I do want to slowly get rid of some of my Realty Income is not because I'm not bullish on Realty Income. It's not because I don't like the single stock. I still do like Realty Income a lot. And like I said, I do intend to hold a ton of it still. But the tax efficiency with Realty Income's dividends are not necessarily going to be as good as this. For example, it says with IYRI, the NEOS Real Estate High Income ETF, this was as of April, I think. It says in connection with the most recent monthly dividend payment of 48.21 cents in April, it is anticipated that 85% of such dividend will be return of capital. Now, especially as you build out a larger and larger portfolio, and trust me, I'm learning this kind of as I go, you're going to want to have the portfolio become as tax efficient as possible, again, depending on what your own situation is. Now, I'm using a taxable portfolio, so again, it's especially important that I sort of point things in the right direction when it comes to tax savings. Now, that being said, I do want to have as much return of capital as possible in my long-term portfolio, which this ETF, as you see right here, at least so far, is offering quite a bit of it. And while we're on the topic of tax efficient distributions, this ETF is paid out anywhere from around 48 cents to around 51 cents. And again, it's only been trading for a short amount of time, but this ETF has the potential, in my opinion, to keep paying consistent income because of what it holds on to and because of its strategy. Which brings me into the next reason on why I want to move some money from Realty income stock into IYRI, and that's because this ETF holds onto some of my favorite real estate investment trusts across the entire market. I mean, what do you know, Realty income is right here, it's around 4% of the portfolio, so it's not like I'm really even getting rid of Realty income altogether if I sell off some shares for this one. But names like Public Storage, I'm a huge fan of. Simon Property Group I also hold on to. Digital Realty Trust is super good in my opinion. Prologis, American Tower is one of my favorites. I mean, there's some names in here that not only have been paying dividends for a long time, but also raising their dividends, and on top of that, some of these names are relatively high beta, so there is going to be some juicy premiums when it comes to selling options. Now, what do I personally expect out of the NEOS Real Estate High Income ETF over time? I honestly don't really expect this ETF to grow all that fast as far as price return goes. I expect it to trade more or less sideways most times, pay investors around 12% per year in distributions, and pay that pretty tax efficiently at that. Now, I personally do think that there is going to be some massive upside potential in the next year or two when it comes to Realty income. I think this single stock will be trading with a 6 or a 7 in front of it in the next several years. And the cool thing about Realty income is that even if it takes 1 year, 2 years, 3 years, we'll sit around and get paid our 5 or 6% yield. Plus, like I said, I've been selling options. So honestly, even if Realty income wants to keep trading sideways where it has been for a long time, I'm perfectly fine with that. But to be honest, I do plan on moving over some of my smaller portfolio positions where I do hold on to some Realty income and buy some more NEOS Real Estate High Income ETF, not only to basically double my distribution rate overnight, because let's be real, Realty income pays around 6%, this pays around 12%, so that right there is a big lift. But on top of that, I personally do want exposure to some of these names, especially names like American Tower, which I used to hold on to and I sold off. I want some more exposure to some of these names, especially through an option income strategy, which I personally don't already have. So now that we talked about the fact that I'm going to start selling off a small portion of my Realty income and start buying more NEOS Real Estate High Income ETF, I lastly, most importantly, want to hear from you guys down below. What are your thoughts on this move? Is this crazy? Is this a good idea? Let me know your honest thoughts down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.